What's up, guys? Welcome back to DCA. So today, what we're going to do is take a look at my investment strategy during the 2022 market should we head into a bear market. We're going to do this in a two-part series. We've had a lot of new individuals come to the channel, and obviously a lot of people will get their first time exposure to my channel via the DCA Index Risk model that we have. I want to talk about how I use the DCA Index Risk model, which is a machine learning algorithm model, during the setting of a bear market in order to guide my dynamic dollar cost averaging investment approach to the market cycle. If you guys like this type of content, hit like and subscribe. I'm a new channel, so it really does go a long way to help. Additionally, if you are interested in the DCA Index Risk model, I've actually made it as a free TradingView indicator, which you can sign up for on the Discord channel, and there's a link to that in the description below. So I feel like, it's important that I explain how I will be using this risk model in the bear market if we should continue down from where we're at right now at around $41,000 and head into a bear market. I'm also going to do a separate video because I don't want to make the video too long and I want to make sure everyone is able to see exactly what I'm doing. So I'm going to do a separate video demonstrating how I will approach the market in the case of a continued bull market. All right. So we're going to start with the bear market case based on the fact simply that we're below the 20-week moving average. We've fallen below the 50-week moving average, and historically we tend to go down to the 200-week moving average in cases where we've fallen below those two critical price levels. So right now we're at $41,000. The market's looking fairly weak. And, it's time to, in my opinion, it's time to sort of consider what our strategy is going to be as we head, farther into 2022. So the first thing I want to show you is this, and this just simply states, if we head into an accumulation phase of the market, which is a nice and fancy way of saying into a bear market. So if we head into the bear market, it always feels much better to say an accumulation phase than it does to say that you're in a bear market. So, we'll use this term here. So I'm primarily going to be acquiring Bitcoin. So 40 to 50% of my total investment is going to be Bitcoin. The reason for this is, so we're comparing on this slide all of the top altcoins to Bitcoin throughout basically the length of the bear market. And this is why Bitcoin should be, in most cases, a very large portion of your plan if we head into a bear market. Bitcoin simply gives you less volatility and more upside, more potential upside in the setting of a bear market than do a majority of the altcoins. So we're looking at, Bitcoin. I just went on CoinMarketCap. You can look at a historical snapshot and find whatever the top 10 altcoins at the time were by market cap, and just look at your returns and look at through the bear market. At any given point, Bitcoin at this time is down around, let's see, Bitcoin right here is sitting at around 75% down, but your altcoins are down 83%, 90%, and then you have a bunch down basically 92 to 93%, all the way down to around 98%. In my opinion, you're going to see a similar picture to this if we head into a bear market right now. Remember, people are saying, well, oh, look at all these altcoins. They're holding their value quite well, even though Bitcoin has dropped below these critical price levels. But at the end of the day, we always kind of see something like this. We always see, right after Bitcoin hits a peak and then starts to retract, we see altcoins pump. And so we saw it in 2018. When did Bitcoin hit its peak? It hit its peak in late 2017. So the middle of December of 2017. When did the altcoins hit their peak? They hit their peak in January and in some cases February. So, almost a month later. And then when did Bitcoin hit its initial peak in this market cycle? Well, it did it in April. When did the altcoins, most of them, hit their peak? A lot of them, in fact, I would say the majority, were in May. So we always see the situation where Bitcoin hits a peak, then it starts to go down, then the altcoins pump. We saw it in April into May. Then we saw it in November into December. A lot of these altcoins were making new all-time highs in December after Bitcoin hit its new all-time high at around $69,000. So in the beginning, a lot of these altcoins are going to hold up. But if we do truly head into a bear market, and this is the type of event that drags out for a year or more, you're going to see a situation where Bitcoin, sure, it's going to lose a lot of its value, but the altcoins are going to lose a lot more. And the key here is, if you take a look at, we'll look Cardano, XRP, Stellar Lumens, NEM, IOTA, Dash, Nano, and Neo. A lot of these altcoins, if you're investing in these, they have never recovered back to their 2017, 2018 prices. So the point is, sure, I can name you 10 altcoins right now that I love. But at the end of the day, I am almost certain Bitcoin, if we go into a bear market, will recover and go to new all-time highs in the next market cycle. I cannot say that for altcoins because they're speculative and you don't know what is around the corner and what may come out in a year or 2 years and replace whatever's out now that seems so amazing. You don't know what the regulatory environment around DeFi will be. Okay, so things like this, because at the end of the day, a lot of the top altcoins right now are smart contract altcoins, and many of them are heavily, going heavy into the DeFi space. So if the governments of the world step in and basically regulate DeFi into the ground, which if you believe that is not a possibility, you're fooling yourself, because simply put, it is. So I'm very, very bullish on crypto in general, but at the end of the day, I approach this as an investment. And as such, you need to be aware of what the risks of your investment are. To simply ignore what the risks are is foolish. All right. So the altcoins that we invest in, I believe in a lot of them, but I'm also aware of the fact that the environment around crypto could severely change over the next few years. But I do think Bitcoin, at minimum, will still be there. And that's why it's the core component of our bear market investment strategy. Okay. So then next, Ethereum will make up 30% of my investment during the accumulation phase. Although I do believe Ethereum, like other altcoins, there's a risk involved with it. It's why it's less than what I'll be investing into Bitcoin. Although just based on the level of investment in Ethereum, I do think it is going to start to provide slightly more stability, although I think it still will show more volatility than Bitcoin will. And then from there, my altcoin investment will start at maybe around 10%. And then if the bear market continues, and as Bitcoin approaches its 200-week moving average, then I will start to move this up towards 25%. Then I'll get, what altcoins? And this list is not, entirely inclusive, but primarily things like Sol, Solana, Luna, Avalanche, Phantom, Cardano, Polkadot, Matic, Link. I think those are primarily the top coins I'm investing in right now. I may be forgetting one. I think that's, for the most part, if you look at the currencies that I've made a model for, that's in general, at least what I'm interested in. And there may be some others, like I have a position in HBAR, for instance, I don't have a model for, but in general, these are the currencies that I will be investing in during the bear market. Okay, so now I want to go on just quickly to the DCA risk index. And like I said, we'll do this through the perspective of, looking at the 2018 bear market, just to get an idea of how I'll be using it. So when the value is between 40 to 50, I will invest 1x. And 1x means whatever a one base unit of my weekly DCA value is. And by the way, I dollar cost average weekly. You could do bi-weekly, you could do monthly, or whatever time frame you want to do. Also, I should quickly mention this is not financial advice. This is simply how I am using this indicator in order to guide my dollar cost average purchase per week. When we're below 50, I will dollar cost average a base value of 1x per week. Then if we drop below 40 all the way down to 30, I will move that up 50% and so on and so forth. Once we're below 30 down to 20, I'll do 2x. So just for a round number, let's say it was $100 a week. So if we were down in this level, which we were, right in here. So once we got down to around $50,000, according to this example, $150. And now where we're at, we are sitting currently, you can see right here, we're at 21.6. So I am investing, accordingly 2x, right? So $200. And I'll just do that throughout the bear market. And we've showed many times how, using a strategy like this massively increases your return over the investment cycle. So as the bear market, and like I said, we'll use 2018 as an example. So let's go through it here. I would just be simply investing per week, once per week, based on wherever this value falls. And you can see that the DCA Index Risk model, not only does it help you identify where a market cycle peak occurs, it has also historically been very valuable in identifying where the lowest and most opportune levels to be investing in cryptocurrency are. So, right here, the model identified this as being a low point in the market. And sure enough, it got down to the lowest level, and that's where it, started its way back up. And we saw the same thing happen back here, back right here in January of 2015. Once we got all the way down to this level, it told you this is probably going to be your best opportunity for this market cycle, right? When we were in this point here, I was investing 3x, 3 times my base DCA value every week. Once it comes above 50, then we'll sell portions of our accumulated asset, but we'll talk about that in the bear market or in the bull market case. Okay. So the cycle continues. We get shortly above, we sell a small portion according to, our dollar cost average sell schedule. And then the bear market sort of resumes in 2019, and we just continue to dollar cost average every week according to wherever we're at. So when we're in these 1x level, which we were for quite a bit of time, we're simply buying 1x, etc., right down the line. And if you compare this even to a static dollar cost average strategy, the difference is quite significant. Your investment total is about the same, but the difference in what you're going to earn at the end by using a dynamic strategy is significant because you're simply investing more at these lower levels. And therefore you're decreasing your cost basis. You invested for a significant amount of time here from around November 2018 all the way through February of 2019 at these lowest risk levels. All right. So you were buying heavily between 4,000 all the way down to around $3,200. And then again here, you were buying heavily at $5,000. All right. And now once we dropped below the 20-week moving average, the risk model slid below 50. We dropped from a price of $58,000. The market became bearish. The risk model also became bearish. And that's when we started acquiring more. So we were acquiring at $45,000. We were acquiring at $36,000 all the way down to $30,000. Now, I sold some of that position that I acquired right here. I sold some of it at around 62,000, and right here when we hit 70, so right at around $67,000. And again, we'll talk about that in the next video. Then the bear market, or the market starts to look bearish again as we dropped below the 20 and below the 50 week. So right around here in the middle of November. And I've just been acquiring once a week, or, I've invested about 6 or 7 times now, just according to the DCA Index Risk model. So, some purchases at the 1x level, some at the 1.5x, and now some at the 2x level. That's just kind of how it goes, guys. It's rather simple. And then with Ethereum, the strategy is similar, but I don't ramp up as much with the altcoins. So I'll do 1x, 1.25, 1.5, 1.75, and then 2x. And you can see, we don't need to go over it as well. It's the same exact thing. Once we're down here, so buying heavily into Ethereum at around $90, then buying in heavily again at $120. Okay. And then start taking small amounts of profit as we move up. So I have talked about moving out of out of Bitcoin into the altcoins once Bitcoin starts to reach into these higher risk levels. And I'll talk about that more specifically, how I do that, once we get into the bull market video. So you should, I'll probably do that either tonight or tomorrow. So you can watch for that. Now, the last thing I'll say is, when I first released this model and first started on YouTube, anytime you're new to something, there's a learning curve. And for me, it's, it was realizing that my situation doesn't necessarily reflect everyone else's situation. So you have to look at your own personal, portfolio, how it's made up, where your financial situation is, where you're at in terms of life. If you're nearing retirement, you're definitely going to want to take less risk, and you'll have to consider those things. If you're coming in late into the market, you're massively diminishing the potential earnings that you can make in the market cycle, as I made a video just demonstrating. So you need to consider that. If you're just out of college and you're very young, well, maybe you want to be more risky then. So these are all sort of things that you need to consider. And, and last and perhaps most importantly, you don't want to be risking anything that you can't simply afford to lose, because cryptocurrency is speculative. It's the bottom line. It's a burgeoning industry. So, there's certainly going to be, an extraordinarily bumpy road. And that's why, using something like dollar cost averaging is beneficial to you. That's kind of how I approach the market. And the very last thing I'll say is this: with the money that I have sitting on the sidelines, I'm invested into various DeFi projects, which I will also be doing a video on shortly. So that's going to be it for this one, guys. If you guys like this type of content, hit like and subscribe. Remember, you can head over to the Discord channel to sign up for the DCA Index Risk model. It's a free TradingView indicator, as you see here. I'll send it out to you, and it covers Bitcoin, Ethereum, Cardano, Solana, Link, Matic, etc., Harmony One, Dot, Avalanche, Luna, Phantom, and Algorand. And I'm constantly making more. At the end of the day, it's kind of how I approach it, guys. And until next time, as usual, see you.